I've had several guests over the last week or so as the deterioration of credit has really caught up. It's been one of the unique, actually, factors of 2018 that the stock market, which has really been leading the way to many other trades and other sectors, is really the catalyst for what has occurred in the credit markets. And that's unusual because usually the credit markets reverberate first. Well, why is that important? It's important because in order to profit or to understand exactly how deep the correction in stocks is or how detrimental to your overall position the credit markets may be poised, we need to understand exactly what happened. And I think it's pretty easy. Buybacks, the gift that keeps on giving. Think about it. Over the years, we've had interest rates at ultra low levels, and companies chose to either use some of their hoards of cash to buy back their stocks, or in many cases, even companies with hoards of cash chose to borrow to buy back their stocks because rates are so low. Rates are so low. Many complain about the Fed raising rates, but they needed to raise rates. Whether it was the establishment of a bunch of zombies, there's a lot of new wave companies out there. Jim Grant talked about them today. And many of these companies have great cash flow, but they're not really profitable. And they've been allowed to exist because of low interest rates. Well, buybacks, think about it. You borrow, you buy, and you buy up here. Now your stock's down here. Is there any wonder that the feedback loop from dropping stocks into the credit complex has created this very quick catch-up by the credit markets? If you look at Barclays, whether it's high yield or investment grade securities, they're indexed for high yield investment grade. You'll notice just in the last couple weeks, that line has shot up dramatically. Do I think this is something to worry about? It's always something to worry about. But in the big crisis of the past, it was always about don't lend short, don't borrow short and lend long. Many of the companies that created many of the crises couldn't get their hands on cash right now, even though they were cash rich in the bigger picture. This animal is something completely different. And how will it ultimately work out? Well, when stocks get a footing, my guess is credit is not only going to stabilize, but it's going to move to much tighter levels quite quickly.